So welcome everybody to this internal learning session with Poopster, and here we'll be talking about DeFi, yield farming, airdrops, even more. But one thing, and I will say this more than once during the course of this session, is that please do not consider this as financial advice. Please do your own research. So whatever is being said by all the people making comments here, please go away, do your own research, and so you don't blame any one of us for saying something. So it's always important to listen carefully, but do your own research. This is not financial advice. And I think Poopster will agree with that.
Thank you. I would have forgot that. Yeah, I absolutely agree. And that's not like just the standard disclaimer that we have to give people. That's like really seriously I've gotten burned a few times when I've, kind of somebody mentioned something to me and I didn't do any research on it and I went and jumped in and so like seriously do really research anything you hear about and make sure it's something you want to do. And I'm not a financial advisor. I'm just a yield farmer, and I'm really just here to kind of share my experience of my experience in DeFi, right? And if you guys want to try some of those things out, then do so at your own accord, like Leon says. So be prepared to lose anything you're gonna play with. So
DYOR.
As we all know, these markets are extremely volatile, and you can lose all your value instantly. So
sure.
Anyway,
so,
go ahead.
I was gonna just ask you one or two questions just to start the conversation. How did you get into this crypto in DeFi, in yield farming?
Right. So I think that I heard about crypto here and there ever since, I don't know, 2015 or so. You hear people talking about it, and I never really kind of looked into it until after the big kind of the 2017 ICO bubble. And so after that blew up, I started like dollar cost averaging into like Bitcoin and Ethereum, and this was like, I don't know, 2018.
Can you just explain that a bit? Dollar cost average?
Sure. Yeah. Well, I was going to. So basically, I'd take $10 or $20 of my paycheck each week and like buy Bitcoin and Ethereum. And so the theory behind it is that I had it set up to buy like on my paycheck once a week. Every Friday it would buy like $10 of each, and it didn't matter the price it was at, because eventually I feel like for me it's a long-term investment. I feel like the price is going to go up. So just kind of
it averages out the highs and lows essentially.
Yeah, it's better than just dumping all your money in at one point and then sweating whether it goes up or down from there. It is kind of an easier way to not have to worry so much about what is the price, because I'm not.
Did you come up with that yourself, or did you know other people doing that?
No, I mean that's something that a lot of people do, and you can find different kind of like strategies out there for dollar cost averaging, and like the same way I dollar cost averaged in, I also dollar cost averaged out. Like while we were pumping, I was slowly selling some, and there's ways that you can do that, like just with putting your assets into a liquidity pool, right? So, it's essentially like a lot of people use like Uniswap version 3 to treat it as like a slow way to kind of sell some of their assets. But
how does that work? Can you elaborate on that? Because I'm really interested in that.
Well, so like, okay, so this is something that I thought was really witty that I did. When Polygon had first launched yield farming, and I had bought a bunch of, I was watching like the charts a little bit, and I'm not any kind of professional trader or anything like that, but I do have, certain things that, we all use different indicators to tell when a price is going up or down. But I had bought a bunch of KNC tokens, right? And so it looked like they were ready to pump, like, pretty hard. So what I did was I paired them 50-50 with Ethereum and put it into a liquidity pool, right? So what happens when you do that is if the price of KNC is going up at a higher rate than the price of Ethereum, that means, people will be like, the ratio, like essentially what I was doing was selling my KNC for Ethereum. So like, one thing I'll add, I'll share is that, like, I think it's important when you go into investing or yield farming or anything like this to understand what is your ultimate goal. And for me, it's to acquire as much Ethereum as possible. I feel like Ethereum is the base asset of what's going to be the financial token of the future, right? So for me, instead of holding all these different shit coins, for lack of a better word, it's simpler just to hold one asset that I feel like is going to be kind of my long-term investment. So while I do hold a lot of these altcoins, and it's cool to, a lot of them will do different things that we like. A lot of people refer to them as like the beanie babies. So like for instance, UMA, all of us have a little bit of UMA, I'm sure. And, we can see what's being built here. So it's easy to be bullish on the token and, want to kind of get some UMA to hold, right? But in the end, I feel like it's all going back to Ethereum. So getting back to what I was saying, Deadcoin, is if when you provide liquidity, I think everybody here knows about providing liquidity. And if you don't, basically it's like, you put, like I said, equal amounts of two assets into a liquidity pool where people can then trade between those assets and then pay you a small portion of those assets for the transaction fees. So over time, your transaction fees will add up, and if projects like Uniswap or SushiSwap are offering incentives like Sushi or Uni tokens as well on top of that, that's kind of like the essence of yield farming. And I'm sorry, Neon, I've gotten way off track here to kind of tell y'all how I got here, right? I kind of jumped into something Deadcoin egged me onto, but can I give y'all a little background first? Sorry, I've kind of anyway. Give me a second, Deadcoin. I'll get back to like liquidity provision and things of that nature, just to get everybody kind of caught up as to like how I got here in my experience. In 2018, like I was saying, I started slowly accumulating these assets or dollar cost averaging in, and by the time yield farming kind of came around, hey Tifa, can you mute your mic, please? Thanks. By the time yield farming started in 2018, I had a good amount of Ethereum saved up. And, yield farming was something that was totally new, that nobody really kind of knew what it was. But it basically, what it was you deposit your assets to a protocol. They reward you with the protocol's governance token. And then so you can sell that token for, whatever you want, or you can keep it and hold it and hope it goes up. So, that's kind of the basis of yield farming when you get down to it. And yeah, so it just so happened that I'd kind of gotten out of an industry I was in. I'd gotten sick and had to stay home. So I did a deep dive into, kind of learning everything I could about Ethereum and DeFi and or what was to be DeFi at that point. Back then, like I said, this was when, they didn't even have like Uniswap. This was before Uniswap and things like that. This was very, very early in like the building of protocols on Ethereum. So kind of like when I got into it, we didn't have all these different projects and whatnot. But yeah, once projects started launching their own token, and then yield farming became a huge thing. I fortunately was able to cash out like some of my 401k, and I dove right into yield farming as like a job. So that's kind of been my job, for the past couple of years now. Another kind of benefit from that is that it allowed me to get involved with these protocols that I'm invested in. And as y'all know, I work for Harvest Finance as a biz dev, and real similar to the kind of things we do here at UMA. Just kind of look for different partnerships and things of that nature to help build the protocol. Also look for investments and things like that. And I started out just helping with like community management and moderating the discords, and I still love doing a lot of that stuff, and that's why it was so easy for me to transition to something like this. It's more difficult now when all the token values are down like 75%, but there's still lots of money to be made yield farming out there. So anyway, kind of getting back into the basis of like what is yield farming and how can you kind of be successful doing it, right? When I first proposed that we did this internal learning session, it was really just kind of to educate some of our like superhumans as to like, I'm getting these UMA tokens now. What can I do with them? Is there a way that I can put them to work for me instead of just selling them for USDC or whatever it is? Some people want to hold these tokens and kind of make a bet on this project that the token price is going to go up and we're all going to get rich and retire. And I think we have a really, to be honest, we have a really big advantage over a lot of other investors or people that are in this ecosystem, because of the fact that we are so close to the team and we can see what they're building every day and see what they're doing. And that kind of thing makes me personally insanely bullish. And it gives us also the opportunity to kind of pump our own bags, as superhumans. We have these campaigns that we go on to try and build the TVL of UMA, which is total value locked, right? If there's any of these terms, I'm used to talking to people in this industry so much that I just use kind of the terms that we use every day. And like if somebody doesn't know what one of these things means, just feel free to stop me and ask, like, what is this? Or if y'all have any questions, by all means, this is meant to be interactive, and feel free to jump up here and give it a go. But anyway, like I was saying, I think that there's some opportunities for us to use our UMA tokens in other ways than just, voting is what the token is meant to be used for, I think, and that's the main, utility of the token. And so there are, and Neon, correct me if I'm wrong, but I think last year the APY for voting, if you voted correctly, was like 38%. Or something like that. So
yeah, it was 35 to 38%, I think, if you voted on each one.
And that's not a bad APY for just holding these tokens and voting. But there's also other ways you can earn yield. In fact, we're getting ready to kick off Deadcoin. In fact, Deadcoin probably has more information on this that he can share. But I know we're getting ready to do our liquidity mining 2.0 with KPI options, and that's in partnership with Tetu. So we have our liquidity pool on Polygon for UMA USDC, and that's on Tetu. And Tetu is what I would call like an asset manager. So they offer lots of different farms and They also have their own decentralized exchange, and they're working on a lot of different things. So instead of just being a DEX or just being a money market, they're kind of a little bit different type of protocol. But they do have a liquidity pool for UMA and USDC, where you would take and put equal amounts of UMA and USDC in, and then you would earn KPI options. Which Deadcoin, can you expand on that a little bit about how those options are going to work? Do you have that information?
Yeah, I do. Actually, I can't pull it up right now because I'm recording, but there is it's kind of wild because they are doing KPI options for the UMA USDC, and we would get them if you put your UMA in there, which is cool because it's like our KPI options that they're using to to benefit us, and the other, I think there's 700 or 900 holders of it on Polygon. But when it reaches a certain amount, I think the first amount is, oh man, I can't really remember offhand, but it goes in 3 tiers. So once it reaches a certain amount, it'll pay off like 0.25, and then another amount it'll be 0.50, and then another amount is will equal, I don't know if there's a whole one or not. I can't remember. But I could post something after this. But there's 3 tiers, and the more money that gets invested in the whole, more TVL that gets locked, the more our KPI options will be worth. So that's something definitely that we want to get involved with, and we're hoping it takes off soon. I spoke with Alex this morning, and we should be I did the paperwork for it, the digital work for it. That should be going through pretty soon. We should vote on it, and I think we're looking at the probably July 1st, which is good because then it'll go into our next our KPI options that we're actually getting from through Risk Labs. It'll add on that one, for one TVL that we got locked. So that's kind of cool. And but definitely check it out. I'll put a post up in the layer a little bit later.
Okay. Great. Yeah. So what Deadcoin's saying is that for every let's say I put 10 UMA equals 30 USDC. So let's say I put 10 UMA and 30 USDC in the pool. Let's say everybody does that. Anyway, what Deadcoin's saying is that when the total value of that pool reaches, let's say it's, I'm going to give some arbitrary numbers because I don't have them offhand, but Deadcoin will post them later. Let's say that pool reaches $500,000. So if we have $500,000 in there, then those KPIs are going to be worth a quarter of an UMA each. And then if we get to $600,000, they'll be worth half an UMA each, and if we reach like $750,000, then they'd be worth 3/4 of an UMA each, and those would pay out to anybody who's providing liquidity on that liquidity pool on Tetu. So that's another cool kind of benefit. Like right now, I'm providing liquidity on Tetu so that other people who are get their paychecks in UMA can cash it out for USDC if they want. And, I get a part of those transactions, and I get a percentage of the transaction fee, and I'm also earning Tetu rewards. So I'm actually yield farming with UMA. They're on Polygon, and like I said, it's trustless and permission. Like anybody can do it. So anybody that wants to provide liquidity. If y'all have any questions about how to do that on Tetu, feel free to ping any of us or let us know. But we do have KPI options upcoming, so
I just put it in the text hub. I didn't mean to interrupt you at all, but I just put the actual prices in the text hub real quick from the UMA. The words might be changed on the contract, but that's what they are right there.
Cool. Yeah, so y'all check the text hub, and that's just another utility for your UMA tokens, right? And there's lots of different ways you can use them. I've been asking forever for the guys to get us approved on Aave. Now, what it would do if we got approved on Aave is I would be able to deposit my UMA to Aave, then borrow USDC against it. So that's good for people who are, if I'm trying to invest in the asset long term, what I would do is I would deposit my UMA there on Aave. I would borrow USDC. I would use the USDC to look for like stablecoin yield farms, which there's, we can get into that later, but there's tons of different ways that you can earn yields with your stable coins. And then, as I gain these rewards and I sell them, I can then accumulate more UMA, right? So I deposit that to Aave. Then the amount of money I'm able to borrow goes up as I collect more assets, and the price goes up. And that's kind of like a basic yield farming strategy. And
we need to be careful with that, though, right? There is a liquidation risk.
Thanks for bringing that up. So for us to be able to do that, you have to over collateralize, and what that means is Aave would set a limit and say, for every $200 of UMA that you have, you're only allowed to borrow $100. So in the case of a big price drop or something of that nature, you would still be able to cover your position if they had to sell that UMA in order to, recoup any losses. So that's a great thing to keep in mind when we're borrowing money like that, is that, you do have to watch your what's called your health factor. And basically it amounts to how much value you have locked up divided by kind of how much you have borrowed. So, but that's kind of what my basic yield farming strategy has been for the longest, is to accumulate Ethereum, borrow USDC against that Ethereum, and use that for yield farming. And
where have you had the best success?
So that's a great question. Like, for me, honestly, Neon, I trust the institutions that have been around for a long time and, haven't been killed by like an exploit or a hack, or haven't rug pulled. There's lots of different ways you can get, lose your money yield farming. And so, for me, it's important to use trusted projects and protocols that have been around for a while. So, a lot of these kind of, fly-by-night projects may not last. And, I've been rug pulled a couple times, or actually once. So, I think that it's important to recognize that, like, these projects that have been around for a while and haven't been exploited, that's kind of like, I know we're not supposed to. Sorry, guys. I know we're not supposed to trust in this industry, but to a degree that you have to trust a project with your tokens. I prefer to use ones like Compound Finance, Aave, UMA. A lot of people don't know UMA is actually one of the DeFi blue chips. So they were around quite a while. They were just very quiet. But that's a good point, Neon, is that it's important because a lot of us can't read all these smart contracts, right? So we don't know if they're safe. So we're trusting the auditors who audit them to find any kind of potential exploits and make us aware of those.
That's one of the first things I do when I look at a new project, and just check whether they've been audited, because that's really important.
Well, and there's a lot of projects that launch unaudited, right? And you may not know that. In fact, a lot of that's like in DeFi summer, that was kind of the thing to do, was launch unaudited projects and, then get the audit after you kind of sell some tokens and get some money. And to be honest, that's how it was at Harvest Finance, where I got started. We have anonymous developers, so we didn't have the money just to have our contracts audited before we launched. So we launched our protocol. We got some value from the farm token, and we used that value to pay for smart contract audits. And in fact, we didn't just get like one or two. I think we had 3 or maybe even 4 smart audits in the first couple months. So that's kind of like a little trick that you can use, Neon, and that's something that I know I've spoken about before. But like for me, when I'm going to go look for, if I want to see if I feel like a farm is safe, I'll go look at a yield farming aggregator, which is, like I was saying, Harvest Finance, which I work for, is what you would call a yield farming aggregator. And for anybody who may not know what that is, that's kind of like a place that you can deposit the tokens that you're getting from other protocols, and we kind of do the farming for you. So Harvest, you deposit your tokens to us. We'll deposit your tokens to the contract. Then we'll claim the rewards. We'll sell them. We'll reinvest the rewards back into whatever your base asset you deposited is, and then you get some farm token on top of that. So yield farming aggregator is just a place that there's lots of different. They offer lots of. It's kind of like the kayak of yield farming, right? So it just finds all these different opportunities for you and puts them in one place, and that's kind of like an easy way, Neon, for you to, or for a person to, who's yield farming, to kind of, ensure that if an audit has been done, or even if it hasn't, a lot of these yield farms won't offer farming for them. But that's so. Like anytime that I see a yield farm on Harvest Finance, I know that not only has the farm been audited, but it's also been looked at by the developers of our platform, because we have to take into account how safe are these different opportunities that we're offering. We don't want to be liable for somebody getting hacked and losing all their money. So that's kind of like a way you can cheat the system. And like anytime I'm looking for the best stable coin farms, I'll just go to several of the different yield aggregators and check what they're offering, and then from there I can go and actually find the farms myself if I want to check them out. But that's kind of like an easy way to find some of the better farms.
And are you now looking more at layer 2s rather
Absolutely.
than Ethereum?
Yeah.
Because of the transaction costs?
Right. Like basically none of us, it's hard to afford transactions on Ethereum. And so just like speaking to Harvest Finance, most of our volume comes from Ethereum because the transaction costs are so high that it's very profitable for people to just deposit and let Harvest do all the compounding and claiming and all that. But yeah, that's a great point. Like,
But is it quite high costs entering and exiting from?
Yeah. Anytime you deposit to a contract, you're going to spend $20, $30, $40, $50 sometimes, just depending on what the gas costs are. But yeah, it does get to be excessive, like, just depending on the price of gas. So you do want to like try to only have to deposit to these protocols once, and withdraw once. But yeah, I think that there's so many opportunities on layer 2 right now that it's gotten really easy to yield farm. And like anybody looking for opportunities on layer 2, I think that some of the best opportunities right now can be found on Arbitrum, Polygon, Phantom. And they're, in my opinion, they're good networks. They've stood the test of time. They're kind of battle tested, and they've been around for a while and been operating, and there hasn't been any kind of major hacks or anything like that. So, that can happen at any time. But, I feel like, the best opportunities right now are going to be on layer 2s, and like we were talking about earlier, that's all the airdrops are going to come from. Like one easy trick to kind of figuring the airdrop thing out is one question you can ask yourself is, does a project I'm using have a token? And if they don't have a token, then you should probably be using that project, because they will at some point, just because every project launches a token. For instance, like our the partnership we have with Polymarket. So I've been doing some yield farming there on Polymarket, which isn't
I didn't know you could do yield farming there. I thought it was just for lucky betting.
Yeah, well, so it is like betting. Now, those contracts, I wouldn't like advise any of y'all to just go and deposit to them. That they are like options contracts, so you really need to understand what you're doing to provide liquidity to them. I had to learn the hard way. I lost quite a bit of money, but yeah, Neon, you can actually earn UMA token, and Polymarket doesn't have their own token yet, so they're paying out their rewards in USDC. Let me see. If you'll go to my market, there's a button in the middle that says Discover Rewards. It has like a little lightning bolt behind it, and you can see all the different farming opportunities they offer. So yeah, you can earn UMA tokens by providing liquidity to these different kind of markets they have. And like I said, they're options contracts, so they're binary options. And like, if you don't understand binary options, I wouldn't recommend providing liquidity to them. You can trade the tokens though, and they offer yield farming even for people that are trading the tokens. So, like if you do X amount in trades, they pay back your trading fees in UMA and USDC. So yeah, like for those of you who were curious about like where the rewards were going, when we had the governance vote, to give Polymarket X amount of tokens for the next 12 weeks or whatever it was, that's where a lot of these tokens are going to, is the people that provide liquidity for these markets on Polymarket.
Right.
They're receiving UMA tokens for doing that. So that's another way that I've just kind of been collecting some UMAs, providing liquidity on Polymarket is done in USDC. So anyway, yeah, there is opportunities for yield farm, but the reason I'm doing it, Neon, like I said, is that Polymarket doesn't have a token yet, and at some point they're probably going to have a token. And what projects like to do is reward early users. So what they'll do a lot of times is go back and see what were the wallet addresses that were early adopters of their platform. When I say early adopters, I mean people who use the platform. This is something that we're doing with Across as well. For any of you that are involved with Across, as you know, like the airdrop we're going to be doing is to liquidity providers. So the minute that Across launched, I went and deposited some Ethereum to one of their pools, and I started providing liquidity. And the good thing about providing liquidity there is that the pools are single-sided, so you're not gonna lose money. There's no risk of impermanent loss because your asset is just in a single-sided pool. So you can deposit like UMA, you can deposit USDC, you can deposit I think Badger. There's several different pools for different tokens that they offer on Across that you can provide liquidity for. And I've been kind of doing that from day one. And as we're seeing now, we're going to be launching and paying incentives, which is in the Across token, to people that have been providing liquidity there. The people that have been providing liquidity the longest will get the biggest multiplier.
I just wanted to point out as well that I'm pretty sure Gitcoin, the next Gitcoin grant round starts tomorrow, June the 8th.
That's correct. That is right. I remember seeing that date. So yeah, like I'll post some information, Neon, in our SuperUMAn layer for everybody to take a look at, and I'm more than happy to like tell you guys about some projects that I like as well. Like there's a lot of projects that need help, you know. A lot of our friends are there. Gabriel Haynes has a Gitcoin. A lot of the people.
I donated the first time round. He put it there. I donated to him.
Yeah. What do you have any like that you like to? There's also like people will put together a package, so they'll have like pre-made packages. So like you know, people that are, for instance, like Hart for UMA. Hart may have one. He may have a package that he puts together where it's like 10 different projects that he likes. Or yeah, and
I kind of look for education or also there's one Camilo Russo of the Defiant. She's got this DiffM magazine to get more women into Web3 because there's not enough, I don't think. So I donate to the magazine, and there's one about planting trees. There was one about doing solar ovens in Africa somewhere. This small, I went and checked them out and just see that I don't like to give to like large projects and well-known projects. I like to give to small NGOs, the ones that don't have the funding. Those are the ones I look for.
And there's like you're saying, there's tons of projects out there, and you can find a project for just about anything that you can think of. But all of y'all are welcome to like start your own project and accept funding as well. So if you have something cool you're working on, you know, like for instance, PVM, I don't think he's here, but he does a lot of like writing articles and he just does a lot of different work here in the industry. And I'd be surprised if he doesn't have one. But if he doesn't have one, I think he should have one because you know he does a lot of good for the ecosystem. But
just want to point out as well, just because you donate to the next Gitcoin round, it doesn't mean you will automatically qualify. It will just depend further down the lines. Maybe something will happen that's good, but just do something because it's a good thing, and maybe in future sometime you will get rewarded. But don't expect to get rewarded.
That's a great point. And all the things that I'm talking about, you know, there's no kind of silver bullet way to do all this. It's going to guarantee you anything. Nothing here is guaranteed. These are just ways that I've found in that previously I have had experience with that helped me to get these different airdrops. But yeah, once again, you know, like donating to public goods is, I feel bad that this kind of cheapens it, you know, but unfortunately, it is one of the ways that they use to gauge, like, you know, the people they want to give airdrops to. So I don't, you know, I don't want to do it to exploit the system. Like Neon says, you know, I highly recommend you find a project you connect with to donate to. There's, like I said, there's millions of different projects out there and different people to support. And right on, I wouldn't do this expecting anything. I would go in donating to a good cause, and if you get an airdrop from it, then that's great, and you possibly could. But there's, you know, that's just one of the few ways that you can kind of secure your spot in an airdrop. And like I said, I feel like the best way to actually do it is to be a user of the protocol, right? So like when Uniswap had their airdrop, they highly rewarded like people. Like there was a lot of people who'd been providing liquidity to Uniswap for, you know, a couple of years at that point, and they instantly became like millionaires overnight just because of that. So like people like Bantag, I don't know if anyway. That's, you know, and that just comes from using the protocol and supporting the protocol. And yeah, so like I think that's always going to be the easiest way to get yourself an airdrop. And like we see with the cross, you know, they're rewarding, like I said, once again, the liquidity providers, And like, that's the best thing. I would, if y'all have any questions about providing liquidity to a cross, feel free to like ping any of us and ask us. But like, I feel like that's really one of the best opportunities out there right now, because like I said before, it's just a single-sided asset. You don't have, there's no kind of real risk of loss besides the smart contract itself. So,
which has been audited.
And does it pay one? It pays 1%.
I don't know if it actually, I don't know what the transaction fees are. 1% to 2% probably sounds about right, Deadcoin. It's not going to pay a lot, but it will pay a lot. It will pay off when you get the airdrop, you know what I'm saying? So, yeah, it doesn't, you're not going to get, you're not going to make a killing. Don't think you're going to make a ton of money in like transaction fees, but you will receive some.
It is variable though. If it's a high utilization, then the actual APY goes up. There was one small point when I think it was USDC or WBTC was like you were getting 35% or something silly.
Wow.
Because the utilization had just gone up really high. But usually it's quite low, like 0.7% or something like that.
Yeah.
So
yeah.
I'm talking about APY here, not the transaction fees.
Oh, what was the
APY is 1, and it doesn't list the transaction fees.
Well, APY is the transaction fees, because you're not going to get. That's the only place that.
Yeah. So I was saying it's like APY is over the whole year. It kind of works out what the whole year would be.
Right.
Yeah.
So, anyway, we're at the end of the hour, Neon.
Yeah.
I don't want to.
Oh, are we?
Yeah, and I'm happy. Like, I don't
have.
I know time flies, right? Like, I don't have. If y'all want to stay and ask questions or bullshit for a while, I'm more than. I don't have anything going on.
Maybe we have one or two questions. Maybe.
Can we finish the one question I had?
Yes, please.
If anybody needs to drop off, then But yeah, go ahead, Deadcoin.
I'll just explain how the pool works. With the coin goes up and then it balances itself out and pays off the other coin. Your strategy for that. You're like how to sell coins. Like you're saying, I would like sell.
Yeah. So a slow way. Okay. So here's the way to look at it. Is and so think about this, Deadcoin. If you put your Ethereum into a pool with USDC, that means you're okay with trading your Ethereum for USDC, because what's going to happen is that as more people buy that Ethereum from the pool, the price of it goes up, right? Because there's less of it in the pool. So you have to give more USDC to get it, right? So if people are just buying and buying and buying, then you're slowly selling your Ethereum. Does that make sense?
Yeah, the part that I was just wanted to find a strategy for is like if I wanted to sell, say I wanted to sell, like Tattoo says it on their page. It says it's a good place to go if you want to sell Tattoo is to jump in their pools. So like the more that Tattoo or the other coin is sold, one coin buys the other coin out.
Yes. So that's the thing about it, Deadcoin, is that you need to know, because, I gave you an easy example with ETH and USDC, but like, yeah, you would kind of need to know that, like, the example I used earlier was I had a bunch of Kyber network tokens and I knew the price was going to go up. Let's say we know a big announcement's coming and we think the price is going to pump like, I don't know, 50%, right? Well, what I did was I took all those Kyber network tokens I had and put them in a pool with Ethereum, because I just, as long as people are buying the Kyber network token more than they're buying Ethereum, I'm basically going to sell my KNC for Ethereum. Does that make sense? Same way it would be with if you put that pool in an asset with $1. The same way you're selling it for $1, you're just selling one asset for another. When you provide liquidity like that, it all depends on which token appreciates in price faster. Does that make sense?
One thing you need to note as well is that when you put liquidity, it's 50% of each, and
equal amounts.
Equal amounts. So if the price of one goes up compared to the other one, because you need to keep it the same in terms of the 50%, you have to sell one, so then they go back to like 50% ratio.
Well, let's put it like this. Let's say one Ethereum costs $2,000, right? Well, let's say some big whale comes in and he buys. Let's pretend that the pool has 100 Ethereum, or excuse me, what's 100 Ethereum? What is that? 2,000 times 100. How much is that, Neon? 200,000.
200,000, yeah.
So let's say that they buy 100 Ethereum, and let's say that there's 500 Ethereum in the pool. So he just took a fifth of the pool's Ethereum. So what happens is it takes more USDC because there's now less Ethereum in the pool. That Ethereum becomes more expensive, right? So if Ethereum's $2,000, the price is going to appreciate whatever it is, 20%. And this is, once again, these are just arbitrary numbers. But like I said, when one asset is kind of purchased from the pool more than the other, then the price is going to go up because there's less of that asset actually in the pool available for sale. Is that making sense? I have a hard time kind of describing some of this stuff, I think. Does anybody have like questions or dead coin? Is it making what I'm saying? Is it sticking, or do you have any other like?
Yeah, I just have to get my mind around it because I was thinking if I just say I had a coin that I wanted to get rid of, I mean, which one?
Yeah,
it's just it's hard to wrap my head around. Like I'm trying to. I did it on paper before. I mean, I've been in Balancer, but I just still don't get it. Like I want a coin to go up or I want the coin to go down.
No, you want the price of the coin to go up. Because if the price of the coin goes up, that means that people are value it more than the US dollar, right? So like UMA, for instance, you want the price of UMA to go up. If you want to sell it, if you put your UMA in a pool with USDC and people are buying all that UMA out of the pool, the price of it's going up because there's less UMA in the pool. So you're effectively selling your UMA for USDC when the price goes up. When the price goes down, people are selling their UMA and you're getting more UMA in the pool than USDC.
So it's changing the amount of not changing the amount of tokens I have? I know I'm being
It's changing. No. It's changing the all it is supply and demand. I think you're overthinking this Bitcoin. It's just supply and demand. Yeah. So it's just supply and demand, and like I'm trying to bring it down to like the most basic level I can think of. Neon, can you do a better job of this?
Eli 3 I need.
I'm trying.
But how if it always balances out 50-50, then how do you win or lose?
Right. Well, if it's not. I mean,
in terms of ratio, it's the ratio. So
what he's saying is that, let me get this. When you deposit, you have to deposit equal amounts, Deadcoin. Does that make sense? Because
I know that. I'm in a bunch of pools.
Okay.
But
now, the 50-50, forget about, other than that, forget about it. Okay? Who am I echoing from? Who's that?
Neon, I think.
Oh, yeah. Okay, Neon, you go ahead. Go ahead. Neon, I don't know. I'm not sure. So just think of it like this, Deadcoin. As there's less of an asset in an asset pool, it becomes more valuable. Does that make sense to you?
Yeah, I understand that. Yeah.
So if people are buying it, that means there's less of it, right?
Yeah.
That's available. So like I go to the market, right? This guy has 50 apples, right? And he can't sell these apples for nothing. Nobody's buying the apples. The apples he's got them priced at like $3. Nobody wants to buy them. He says, "All right, I'm gonna change the liquidity pool on this," and he makes them available for $1. Well, now everybody wants apples, right? So they come and buy all his apples real fast, right? Like he's almost sold out of apples. So now there's only 20 apples left, right? And he's like, you've got 20 different people asking for them. You're like, well, actually, these apples are now $2 because there's less of them for sale, right? So that's all it is supply demand is the when you put these assets in a pool, as one of them becomes less, that means it becomes more valuable.
So you get out and sell.
Well, no, you don't have to get out and do anything. When you put your asset in the pool and people are buying it, you're selling it. Basically, so think of it like this: what's your favorite token? What's your beanie baby? UMA tokens? Say we're talking about UMA.
ETH or something.
Okay, yeah. Just say that. Well, I wouldn't pair UMA with Ethereum if I wanted to sell it because I think that Ethereum's going to outperform UMA. I think Ethereum's going to outperform everything. That's why, that's my base asset. That's what I'm most bullish on. So, I wouldn't pair. The only reason I would pair UMA with Ethereum is if I wanted to, sell my Ethereum to get more UMA.
Okay, so the numbers can change. The tokens, the amount of tokens will change, but it just keeps the price. It balances out the price.
The amount of tokens keeps changing in the pool, right? It's constantly changing, and that is what makes the price
go up.
Yes, because if you have 10 Ethereum in a pool and you sell and they're $2,000 each and you sell one of them, well, now they're not $2,000 each anymore because one of them's gone from the pool. So you have 10,000 USDC, but somebody buys one. So now the pool has 12,000 USDC and 9 Ethereum. Does that make sense?
Yeah, that makes sense.
So now there's more USDC than there is Ethereum. So then you sell another one and your pool has 14,000 USDC and 8 Ethereum. So the price is now $2,400. Or, the numbers I'm not saying here I'm just using random numbers. But
yeah, I got you.
Am I explaining? It's hard to, I don't know why this is so hard to explain. I always find I have trouble with it though. But yeah, so if you wanted to dollar cost average out of anything, one of the smart ways you could do it would be to pair it with USDC. And if you think the price is going to go up, you pair it with USDC in a liquidity pool, and the liquidity pool slowly sells your asset as the price goes up. Unless the price goes up really fast, in which case it sells your assets quickly.
So then you'd end up with more USDC than...
Right.
Okay, so they give you...
That's how you...
Okay, I got you now.
That's how you dollar... That's how you sell. That's what... Right. Now you're getting it. Yeah. You end up with more USDC. Right on. And that's how you dollar cost average out of a token. So, the same way we were talking earlier about dollar cost averaging in, which is just, kind of buying that token slowly. Well, this is the same thing. You're just selling that token slowly, So, anyway, does that, do you have any other questions about that, or is that?
No, I'm good. I'll leave this time.
Is that what you're trying to do? Is that what you're trying to do, Deadcoin? You're trying to sell some shit coins for Ethereum?
Yeah, I was just curious if I had a shit coin. I just put it in there to let it die. Somewhere. I was just trying to think how to let it die, when I could maybe,
Well, that's the bad thing about it. If it's just a worthless shit coin, then you don't want to probably. Pair it with USDC because if the price is going down, you're just going to end up with more of that shit coin and less of your USDC, right?
Yeah, that happened to me with Ethereum and GOM. It got killed.
Well, yeah. So if I were you, I would look. That's what like a lot of people look for single-sided staking opportunities, and this is what we were talking about earlier with the cross. So the safer play is to find like somewhere where you can stake it single-sided, right? So that means you only have to provide that one asset uh, to the pool, right? So there's some platforms that you can actually do that with. Bancor is one of them, and a lot of people don't know about Bancor. Bancor's, and these are real. They're really good people too. On top of what they've built, which is really amazing. Bancor V3 is coming out. It's like being released this year, and it is. I think it's going to change a lot of things in this industry. It's really Neon. That's something you might want to take a look at if you're interested in kind of the new way to provide liquidity. Bancor V3. So, yeah, Bancor offers, like, for instance, for Harvest Finance, if I want to, that's where Bancor is our main liquidity provider. So that's where most of our liquidity is it's on Bancor. Because the cool thing about using Bancor, and the uncool thing, I'll just tell you right now, is that that like the cost to deposit and withdrawal and do transactions is quite high because it's on mainnet. So it's not going to benefit you unless you have quite a bit of money. But
you need to be at least a small whale to do that. Yeah.
right. So, but with V3, it's going to be on Polygon. It's going to be on a lot of different L2s, and I really think, yeah, it's going to be. Like if y'all haven't checked into it, I would definitely check it out. I'm very impressed with what they're building. But so I can go there and deposit my farm and I can earn 30% APY without the risk of losing it, right? So like we were talking about Deadcoin, how you have to provide USDC in your UMA or ETH in UMA. Well, on Bancor, you don't have to do that. Bancor basically, they've built it into their tokenomics to where they provide the other half of your liquidity. So they allow swapping between any pairs, and they kind of use the BNT token as kind of like the protocol token. And it's like, I don't want to get into the mechanics of it because I'm not 100% completely familiar with it about how it's done, but I do know that Bancor kind of uses their token to provide the other half of your liquidity. So, like I said earlier, if you're yield farming and kind of want to find some of the safest yield farms, those are going to be things like single-sided places you can single-sidedly stake your asset. And there's not of those. Like I said, Across is one that I think is going to be. I think the airdrop for Across will be profitable if you have some Ethereum, or you can even deposit your UMA there. And like, if I had UMA that I wasn't using for something else, I would deposit it there. I think that the airdrop is really going to pay off. So yeah. What was I talking about? Single-sided staking. There's other opportunities. For instance, you can go to Tetu. If you go to tetu.io, they have a button you can click right there on top that says, like, they had all their different yield farms. They offer like tags that you can click on. So some will be like LP farms, or single-sided staking farms, or stablecoin farms, or Ethereum-based farms, or whatever it is. But yeah, you can just go to the top and click on single asset staking, and it'll show you all the different assets you can stake by themselves there. And they even have a Neon. They have one for Vesk as well. And in fact, I invested there.
That one's doing good.
It was for quite a while. I haven't looked at it in a while. I mean, I didn't put like my life savings into it or anything, but I do have some money there that I invested in Vesk, and yeah, it was I earned quite a bit of the APY on it was huge when I had invested. So I think I made quite a bit of, not quite a bit, but I made a good APY on it. So I was very pleased with that. Yeah, if you'll go to, if anybody's online and they go to app.tattoo.io, you can see it right there kind of in the middle of the page. It says, in fact, it has a couple different options. It says you can select single-sided tattoo farms, single-sided auto-compounded farms. And the difference between those is auto-compounded means they take all your farming rewards and they sell them and use them to buy whatever token you deposited in the first place. They also have another one, it's called single tattoo farm, which means that they keep the profits and give you tattoo. So for the people that like want to kind of be a part of the project and earn some tattoo, and like, you know, because tattoo has governance as well. They're doing a lot of like I don't know if y'all have seen, but Polygon's trying to make a big thing with the different chi wars and bow wars, and they're having all these different. There's a new way to yield farm now. There's a new way, you know, this is like DeFi 2.5 or something, where they're having all these different. What are they called, Neon? They're like. Where you bribe, they have these different bribing systems.
Oh, that's right. Yes.
Yeah, they have all these
curve pools and things like that. Yeah.
Mm-hmm. So there's so much to try and keep up with this industry, man. But yeah, like
that's the one thing that's hard to find is an off ramp.
So that's another, yeah. And like if anybody has any like suggestions for off ramps, you know, we're all ears. I personally have to use Coinbase. I don't have any other option. Somebody, you know what I saw the other day? I saw one called On Juno. I don't know if y'all have seen this yet. Deadcoin, you may want to take a look at this. It's On Juno, ONJUNO. It's a new kind of bank, and actually, I need to sign up for this. Crypto-friendly banking. And basically what it allows you to do is it's an actual bank, and you can deposit your, you know, paycheck. You can have direct deposit there with your paycheck or whatever you want to do. But you can also get a card where you can send like USDC directly to your bank account, and you can spend that USDC as dollars. So
this is for US customers only, right?
I believe so. Have you looked at the site, Demon?
I have not. What's it called?
I think it's okay. Here, I'll share it with y'all. You may be right. I'm not. I didn't think about that. It may be U.S. only. Where's the text hub that we're in? Let me see. I got so many different text hub. I'll share it right here in the text hub.
Sure.
Y'all can have a look at it. It's on Juno.
On Juno. Okay.
Okay. I don't think we get a cross token for providing liquidity using UMA. Smarty, is that okay? Are you trying to say? I'm not sure exactly what it is you're mentioning there. Sorry, I didn't see that, but
I think he's right. If you provide liquidity in other pools,
is he talking about on a cross or
on a cross? Yeah.
So you're telling me that they're not paying the UMA. The UMA pool isn't getting emissions.
There was something
that doesn't sound right.
It said 1% earlier.
What's that?
It did say 1% when I looked earlier. I was checking. Like yesterday and today.
Yeah, it's most of that was for it's from UMA. UMA is supplied that. I think most of it.
1% is.
But I think you're talking about the airdrop.
No, I'm
because
talking.
you had to.
Oh,
you had-
him talking about the airdrop. Okay.
Yeah,
Yeah.
Smarty said, I don't think we'll get a cross token for providing liquidity using UMA. And so
So
if you're
that
talking about providing liquidity on a cross with the UMA token, is that what he's trying to say, do you think?
no, I think it's to do with the airdrop, because if you provided liquidity before March something or other, then you would get airdrop,
Oh, yeah,
but
you
not from
still
the UMA one,
not from the UMA pool? That's
not from the UMA pool.
strange.
Yeah,
Wow.
there was some reasoning that they did. They said that.
Where's that I'd love to see that information.
I'll try and get it. It was on the cross. It's Kevin did
Yeah.
quite a few of these documents and stuff, and it
You
was
know
on
what
there.
they need to do, Neon, is make their site more they this kind of, now that we have they need to be listing like what pools are earning, like it needs to be shown on the site. So if you go to across.to, it should say, like if you went to the pool, like when you click on that drop down, it should say next to any of the name of these, it should have like a little symbol or whatever to indicate if it's receiving rewards, to indicate that it is receiving rewards. So
I think that will happen once the cross token is launched, and they will have the UX and everything updated.
yeah.
Then.
So I'm not sure. Like right now, like I said, I deposited Ethereum. I was pretty sure that
They're saying in the background it is accruing, but until the
yes,
token is launched, they're not going to show it on there.
But my question is okay. So you're saying, so Smarty, then correct me if I'm wrong, but you mean that the UMA pool does not receive any emissions? There's so many now. There's way more than I thought there was. There's Boba, Wrapped Bitcoin, DAI. I don't know if any of those. I would assume all of them receive emissions, but if he's saying,
I don't think so. I think yes, they will receive emissions. I was talking about the airdrop. If you qualified for airdrop.
Oh yeah, well that's over with anyway now, isn't it?
Yeah,
But right now you are accruing across rewards if you're providing liquidity.
Yeah.
Yes.
Yeah.
I'm pretty sure you are. Yeah.
Yeah.
So like it's so I've been providing liquidity since the very beginning, and I'll continue to because I think that it makes my multiplier just I don't know. I don't know the complete details. Smarty may be more up to date than me. So anyway, yeah, I think that Across is doing a really good job with the way they've structured their airdrop, and I think that I'm interested to see. He was talking about the air. Okay, so yeah, I would assume that all the pools, including the UMA pool, would be eligible for Across rewards. I don't see why they wouldn't reward UMA, but I could be wrong. So, and this isn't. It kind of is regarding the airdrop, because they've already had, like, the airdrop is like a certain percentage of the tokens, but as we speak now, they're still receiving rewards that'll be airdropped to you too. So yeah, I know it's maybe a little confusing. I think that what Smarty's talking about is that there's going to be a certain percentage of tokens that the people who were early users are going to get USDC, DAI, ETH. So anyway, that's one thing I kind of need to jump into and investigate. But yeah. I think they're doing a really great job with what they've the way they've put it together. So anyway, yeah. So I don't know.
Right. Does anyone have any more questions? Because we're now an hour and a half
Hour
in.
and a half in. Yeah.
It's
Wow.
been a good session.
We went a long time, man.
Yeah.
Well, there's lots to talk about when, because there's so much being built here. But yeah, if anybody has any questions, like we can make this a bullshit session. I was just looking through my, I'm trying to find,
maybe in a few, actually, one question. A lot of people are talking about it's going to be layer 2 season soon.
Mm-hmm.
Do you see that as well?
100%, man.
Yeah.
I completely agree. Like, there's so much being, and just to kind of like I said, Harvest Finance just launched on Arbitrum. So like, I know that there was a lot of early projects that kind of, that jumped on, and now they have a whole ecosystem there. Anybody that hasn't used Arbitrum or Optimism, both of them are amazing protocols. And I can't attest to like the security of the actual protocol itself. I believe they're very secure, but I'm not a security expert. So yeah, like they're both very fast, very inexpensive. Same thing with ZK Sync. I'm gonna do some looking into and see if there's some more projects that are launched on ZK Sync. But like just for Optimism, and you can bridge to Optimism using a cross very cheap. So I'm going to share this tab with y'all that I found very helpful for yield farming. So I'm going to post this in the text hub, and what this is it's Optimism's ecosystem website. So it has like easy links and pictures of all the different protocols that are currently on Optimism. And I think there's one
that's
of these
good
for our,
because I couldn't find nothing on when I was on there. I like just got caught in some kind of wild goose chase to find some something on there.
Check that site out. Dead. I think that you'll like that quite a bit. There's a lot of and like I said, I know there's one of these for Arbitrum as well. Let me find it. And I'll share that because it has. That's how I had to do a lot of the like early investigation, was just using what they. And this is kind of what I talked about not too long ago, is that when I was saying that about following the project, as far as Twitter goes, not following all the shit posters, following the developers and the teams. This is the kind of information that they put out there that they want you to have, so that you'll be, educated and informed, and kind of, know everything that they have to offer, right? So here it is. Yeah, I found the Arbitrum portal. Like, there's tons of DApps here that you can use, and I think that especially if you use any of these ones that are listed on their portal, those might be, indicators of protocols you can use to get the airdrop, right? And that's not, a guarantee or anything. That's just something that I feel like you could do to up your percentages of actually getting the airdrop. So I would look on here, and there's tons of like I said, there's tons of different projects already on Arbitrum. I wonder if there's one of these for ZK Sync now. That would be great if they had one. ZK Sync portal. ZK Sync. I'm gonna see if I can find one. Neon. Yeah. Is there any question? Anybody got any questions, y'all? Introduction to ZK Sync. Anybody have anything they want to talk about, or like, do y'all have any cool farms that that I didn't maybe talk about? And I don't know, like, y'all know of any other airdrops, or is there any other L2s maybe that we can talk about? Because I've talked a lot about like Optimism, Arbitrum, and ZK Sync, because to me those are the best three to use.
Do you use Airdrop IO?
I used to. I think that the best resource, in fact, I'll just share them with y'all. Fugu from Creator DAO. He's become like the airdrop master. So if you follow him on Twitter, he knows a lot. But there's another one. Here, I'll share Fugu's. He tweets a lot about airdrops. And I'll put that in the text hub. And also there's one called DeFi Airdrops on Twitter, I think. And it's the only one I use /trust. Deadcoin. And this is the one. Paste it in the text hub. So the other airdrop.io, yeah, I used to use that, but they offer some airdrops that are really kind of I mean, you can use it, but I would be very cautious about doing any of the airdrops that they offer, because some of them are like, some of them are just complete shit projects. Some of them are scammy. Some of them are bullshit. It's hard to kind of filter through the bullshit that they have on that site. But if you'll look at the site that I shared with you, or the Twitter I shared with you, they only ever share legitimate airdrops on Ethereum. So both of those Twitter accounts would be great places to find your airdrops, in my opinion. Follow. Here's another thing you can do, and not everybody has 0.1 ETH. But I think that, and I kind of FOMO'd into this when I heard about it the other day, is I don't know if everybody's heard this yet, but they're offering these Pooly NFTs for to support Pool Together. The founder Leighton has been sued or whatever. Yeah, somebody sued him, and he's got a court case ongoing. So the way that everybody's supporting him is by buying these Pooly NFTs. And they're, like I said, they're 0.1 Ethereum each, and I know that's quite a bit of money. So if you may not have that, but I think that at some point these Pooly NFT holders will probably get an airdrop as well. Once again, that's not a promise. That's just a hunch coming from somebody who's been doing this a while. I think that these people that helped out and bought these NFTs will be rewarded. Yeah. Anyway, I know that I've kind of veered way off here, so. Anyway, yeah.
Okay.
If there's anything else that you guys want to, if there's nothing else, man, I don't know how much longer I can.
Maybe we should wrap up. You've been talking for an hour and nearly 40 minutes now, so.
Yeah, and I'm happy to. Leading DeFi projects wallet. Okay, here we go. I found the one for Matter Labs, which is ZK Sync, and it looks like Aave, Balancer, 1-inch, Curve. There's some stuff here. I'll share this link with y'all, and y'all can look at it.
Awesome.
Mm-hmm. Yeah, you're right. I've been Neon. I don't mind going over, but I think we're getting to the point where I don't have anything else to drone on about at this point. I think y'all have gotten all my kind of
all your
secrets.
alpha.
Pretty much, dude. I can't think of anything else, man. I can. There's another. I have some other protocols that I'm using actually I have another. Okay, so there's tons. Neon, what you were referring to earlier with the L2s and L2 season.
Yeah.
I wish somebody had an aggregator or a list of all the different L2s because there's so many. I'm using one now that's just in testnet, so it's not even. They're not even actually. Anyway, it's called the Arctic testnet, and this one's being built by the Icon ecosystem, which y'all probably don't. Icon was a 2017 shitcoin. They're building an EVM compatible chain on Polkadot, but it's also like will connect to Ethereum. So right now they have a testnet up. I've been doing transactions on that testnet. Anytime there's testnets, I would highly advise that you guys, if you want to up your chances to get an airdrop, use testnets as well. So a lot of times that's all they'll have, all the protocol will be a testnet before they kind of actually launch on mainnet. So that's another way that you can kind of up your chances. But yeah, Neon, I do have, I'll share it if y'all want. And I'll I'll include all the directions on how to get testnet tokens and all that stuff. But I don't know. So if y'all are interested in that, ping me because I don't want to go through all that if nobody's going to use it. But yeah, there's
let them DM you.
Sure.
One thing I want to just reiterate as well for the recording as well as for people here. This is not financial advice that Poops is giving. He's just giving all his strategies and things that he does that works for him. And you need to do your own research.
Yeah, thanks, Neon. I appreciate that. Yeah, I these are, once again, I'm just trying to share my experiences here, and
we appreciate it as well. It's awesome.
Yeah,
I'm overloaded. I'm kind of overwhelmed with all the stuff that you're given, actually. So
sorry.
It's going to take a week to research all this.
I know it's a bit much. I should have probably I tried to kind of stick to
airdrops. It's awesome.
Yeah. So
it's something there for everyone, I think.
Good. I hope so. I hope everybody got something out of it because like I said, I can talk forever. But I'm happy. Like if there's, I do. Like I said, I do have more resources that I advocate that if you want to up your airdrop percentages, there's still. I still have some other things I can share. Like I said, mostly it's just testnet projects that I'm using and things like that. So anyway, I think we can cut it off at this.
Indeed.
If y'all have more questions, tag me. Just tag me and post your question, or if you need some information on something, or if you even have some alpha on something you want to share.
Let's continue the conversation in the text hub like we have.
Sure.
So if anybody wants to carry on there, feel free to do that.
Thanks for putting up with me for however long it's been now. I appreciate it.
Thank you. We really appreciate it.
More than happy. All right, gang.
Okay, thank you, everybody. And stay super.
Stay super, y'all.
Yeah, good night from me. It's way past my bedtime.
It's going to be ornery in the morning.
All right, cheers.
Bye, guys.
Bye. Bye.